1490 WGCH. This is Kerry Lutz. You're listening to the Financial Survival Network. We are live from Freedom Fest 2012 in the scorched desert of Las Vegas, Nevada, where you will be hard-pressed to find a green shoot anywhere. And we're fortunate to have Rick Rule of Sprott Global Resource Investments, somebody who's been in the mining stocks, who's been investing in gold and silver probably since he opened his first bank account. God, that's a long time ago, right? Hey, Rick, welcome.
Thank you.
Great to have you. We're talking about resource investing and talk about the red-haired stepchild of the global investment community. You must be feeling like Rodney Dangerfield getting no respect.
Mercifully for us, a lot of our client base has been with us for many, many, many years. And a client base that's been with you for a long time has been through many cycles. What our long-term clients have found out is that bad markets are good in the sense that assets are marked down cheaply, and good markets are bad. And for many of our clients, we have taught them that you try to have the discipline to sell investments when you're feeling smart and buy investments when you're feeling stupid. So for the sort of core client at Sprott, these are pretty good times. For the marginal client, the clients that are new to us, the clients that came in 2009, 2010, the good times, these are certainly painful times. But everybody needs to go through the learning period. I did, I know you did too. It's certainly a challenge for all open-ended fund managers to deal with times like these. When stocks are cheap, which is precisely the time that you should be buying them, you have redemptions and you have to sell them. And these bear markets feed on themselves. But the simple fact of the matter is, in the natural resource-based business, you're a contrarian or you're a victim. Those are your two choices. With regards to Sprott, mercifully, we manage about $10 billion on behalf of contrarians.
Be a contrarian or be broke is really what it comes down to. And really, the philosophy that you're discussing here kind of goes back to the Ben Graham value investing, where back then they used to look at things like dividend, book value, net assets, asset ratio, all that stuff. When you're looking for a mining company, aside from management, we know that's crucial. What do you look at on the balance sheet?
Well, let's start right now. In points in time when the junior market is extremely out of favor, you can often find Ben Graham's favorite species of stocks, which are net-nets. A net-net means that a company is selling at a discount to the net working capital in the treasury. In the psychotic break that occurred in 2008, I found, without much work by the way, 19 junior mining companies that were selling at 50% discounts to the cash on the balance sheet. That's equivalent to walking down Las Vegas Boulevard here and having some guy come up to you and say, "Sir, would you take $1 for this 2 quarters?" In these market conditions, the right answer to that question is yes. So the first thing that you look for in a balance sheet is, of course, cash. The second thing that you look for on a balance sheet is sunk capital that's money good. Sunk capital means you'll find a company on occasion that has a $10 million market cap that has spent $80 million on the project that they wholly own. You need to determine for yourself whether that $80 million was in the first instance well spent and what you think that asset is worth. But finding a company that's selling at 15% of tangible book, when you think the tangible book at some asset price is money good, is a very good place to look, particularly when that money good shareholders' equity is combined with reasonably good liquidity. The third place you go is precisely where you started, and this is critical. Mines are made as much as found. Good people make good mines. You want to find people, and this isn't on the balance sheet, except that it is. You want to find people that have been serially successful. And people that have been serially successful, people who have lived through the conditions that we're living through today, will not have let their company get into financial distress. You won't find somebody like Lucas Lundin, who's been serially successful, or Ross Beatty, who's been serially successful. You won't find these people letting their balance sheets get too badly deteriorated. It's very, very, very critical that you find good people. And one of the ways that you find good people is finding good balance sheets, because they understand the reality of capital-intensive businesses.
And we're dealing in a cyclical industry. I mean, if you go back prior to 99, nobody wanted to own metals. I mean, I guess industrial uses, you had to consume it, but gold was really banished to the barbarous relic of history pile. Now, here we are, we're in 2012. When I look back, I bought my first gold in 1999. I paid $282 an ounce. I'm not like overly obsessed over the daily price, but somebody who is on the sidelines now, Joe Six-Pack, actually I call him Joe Two-Pack, because he can't afford a six-pack anymore. What do you tell Joe two-pack? He's got 10 grand and he doesn't know what to do because he's lost complete faith in the system.
Well, that's a wonderful question. In the first instance, you need to know my bias. In the first instance, I'm a gold bug philosophically. I understand that gold fluctuates in price, but it has been known for thousands of years that gold is simultaneously a medium of exchange, like money, but it's also a store of value. If you have a currency note from some country, what you have is a promise to pay. It is somebody else's liability. If you have a piece of gold, it isn't a promise to pay, it is payment. So I'm a gold bug. We need to get that bias out of the way. In terms of gold for Joe six-pack, Joe two-pack in your illustration, is that Joe two-pack has to examine history, not in the context of the fact that things will play out this way, exactly the way they played out the last way, but it's very instructive to note that in the gold bull market of the 1970s, a wonderful run from $35 an ounce to $850 an ounce, fortunes were made and lost.
Days.
In the middle of that fantastic run in 1975, the gold price had run from $35 an ounce to $200 an ounce. It was becoming a self-fulfilling prophecy, except it didn't. In 1975, in the midst of the biggest gold bull run in history, gold fell by 50%. Several lessons from that. In the first instance, you need to be psychologically and financially prepared for a 50% cyclical decline in a huge secular bull market. For those people who got shaken out, either because they couldn't stay the trade psychologically or financially, they missed a move from $100 an ounce, which was the bottom after the fall, to $850 an ounce, and that took place over 6 years. It's very, very, very important for people who own gold or any other financial asset to understand and be prepared for A, cyclicality, and B, volatility. Very, very, very important. If Joe two-pack is not willing to stay the trade, he should invest in a third can of beer and enjoy himself.
There's something to be said for that, and if he goes to Costco or a warehouse club, he might be able to get a case. Rick, you've been in this resource business pretty much your whole life. You seem just as passionate about it today probably as you were when you started. How'd you get into resources? What attracted you to it, and what kept you here all these years?
Well, in one instance, I have family background on both sides of my family in resources, so some of it was by osmosis. But I became interested fairly early on in resource-based businesses, in particular agriculture and oil and gas. I had the good fortune, somehow, I don't know, serendipitously, to figure out in my teens what I wanted to do, and I pursued an academic interest in natural resource finance, emigrating from the United States to Canada in the 1970s to go to the University of British Columbia, and I've been in the same business ever since. There was a time as a young adult when I thought the success that I had enjoyed in natural resource-based businesses meant that I was a really smart guy and that the skills that I had learned in resources were transferable to other businesses. I learned rather conclusively that they weren't. I live in California and I have clients who are very successful technology investors. One of the things that I've decided now in my declining years is that I'm not investing in businesses I can't spell. So I don't do things outside resources because I understand the way resource industries work. I understand personally the people who are employed in the resource businesses. I know how to study the things, and I have a definable competitive advantage personally in natural resource-based businesses as a consequence of having been in natural resource-based businesses for 35 years.
You go to work in the morning. I assume you have like a small office, a small staff. Do you feel like you're going to work, or do you feel like you're going to have some fun?
I jokingly say I would do this for free if it didn't pay so well. That's a bit of a lie. But I certainly look forward to going to work every day. One of the wonderful things about working with the Sprott organization is that there are 200 of us worldwide, and 200 of us that have worked as part of one team or the other for 20 or 30 years. We have competent people who are a joy to deal with. By the way, that doesn't mean we don't fight, but it's wonderful to interact with these people. It's wonderful to interact in an organization that is as large as we are, but at the same time is focused. So in the first instance, I'm passionate about my subject, and in the second instance, I am lucky enough to be surrounded by coworkers and clients who I have known for a couple of decades, who I would find ways to spend time with were it not for work.
And then the final question. So you've got some kid going into college now, and we don't have enough geologists, we don't have enough mining engineers, and we have way too many freaking lawyers. Me being a lawyer myself, I can personally testify I'm definitely not needed in that regard. How do you get the younger generation into a business that appears... I see a lot of gray hair and I see a lot of shiny scalps out there. How do we get people to understand the opportunity and to commit themselves for what can be a really great career and a passion?
Well, we are in fact short geologists and engineers. Having said that, I wouldn't necessarily encourage a young person to go into the field. I would encourage a young person to go into a field not because they think they'd make money at it, but because they think they'd be passionate at it. If you're passionate at something, you're going to add value. And if you add value, you're going to make money. We have interned several young people, well, many young people over the years in geology and engineering, and invariably the young person has made the right choice. The young person who has worked in the field in geology for 3 years, or pardon me, for 3 months and came back with bug bites and sunburns and scrapes and bruises and stuff like that and said, God, I can't wait to do this again, is going to become a good geologist. The one who comes back and tells me, you know what, I'm never going to spend 3 months at a place with old stinky guys and no girls again for the rest of my life, should do something else. So what I have to say to the young people is follow your passion. I hope that in junior high school and high school, you all study a lot of math. Because if you study a lot of math, it will give you the ability to do a whole bunch of different things, including geology. If you preclude math and science in junior high school and high school, what you're doing is closing doors for yourself. So whether or not you choose geology or engineering, in junior high school and high school, do the math, do the sciences, do the labs. It'll open doors rather than shut doors.
That's a great point. I bet if I interviewed Eric Sprott and discussed passion and love of what you're doing, your purpose in life, he'd say the same thing. I've talked to Jim Rogers, Mark Faber, everyone I know who is extremely successful, and my limited success all came from following passion. And unfortunately, they don't teach enough of that in school. There's no course how to follow your passion and be happy with your life, right?
I guess that's correct.
Yeah, well, maybe that's a good postgraduate program. But hey, Rick, thanks so much for being on the FinancialSurvivalNetwork.com. We will talk to you soon.
A pleasure. Thank you for the opportunity to speak.